I am Nicole Lafour. I am the director of the Feed the Future Innovation Lab for Small Scale Irrigation. And I want to welcome everyone joining today and who's watching later on behalf of our project. So this session is called On the Money. It's innovating finance to enable farmer-led irrigation. And by farmer-led irrigation, what we mean is individual or household level irrigation. It's dispersed. It is usually investments by the farmers on their own in technologies, labor, and other inputs. It is usually for production for both the household and the market, but increasingly for the market. And these characteristics set farmer-led irrigation apart for other forms of irrigation, such as communal or public irrigation schemes. And as there has been an increase in farmer-led irrigation, particularly over the past 2 to 3 decades, public sector actors, development partners, researchers have all been pointing to the need for credit, and seeing credit as really the main, credit supply in particular, is really the main constraint to expanding and accelerating small-scale irrigation. But even as farmers have increased their own investments in irrigation, it hasn't been as rapid as predicted or as expected. And in order to ensure equitability and sustainability, we really need more information on how to go beyond these earlier general calls for increased credit and really move into being able to offer and provide access to smallholder farmers to credit and finance for irrigation investments. But we need to understand both the supply and the demand for credit. And then we need to look at the cases where there have been innovative approaches and where there's been successes, but also learning from the failures in making finance affordable and available to smallholder farmers, and to see how we can do that equitably. So that will be our focus today. So we'll go into some presentations first, and then we'll have some discussion with the presenters, and then open it to our participants and our audience for questions. And you can at any time type questions into the chat box, or you can wait and we'll take questions at the end as well. So our first presentation today will be from Bedru Balana. Bedru is an agricultural economist and currently a research fellow at the International Food Policy Research Institute. Before joining IFPRI, Bedru was a senior researcher at the International Water Management Institute, where I had the pleasure to work with him. And before that, he was a research economist at the James Hutton Institute in the UK and a lecturer at Mekelle University in Ethiopia. Bedru has well over 45 scientific research papers in peer-reviewed journals and other types of publications. Abby, will you be able to share the presentations now? And Bedru, I'm going to hand over to you to get us started today with presentations and setting the scene.
Okay, thank you very much, Nicole, for that wonderful introduction. So, the next slide, please. So, can you show the next slide? Oh, yeah. So, my presentation today is based on 3 published papers recently on issues related to irrigation and other agriculture technologies, and based on data from Ethiopia, Tanzania, and Nigeria. Next slide. So in terms of the presentation, because of the time shortage, I just say a few words on motivation of these research papers, especially on data and how we do the classification of the credit constraint or the credit access to farmers, and then key messages from that 3 papers, and a few bullet points finally on the policy implications. So people who are interested to go for a deep dive for the detailed analysis and the data, I encourage people to read those 3 papers, which was displayed in the first slide. So as a way of motivation, many times there is quite a lot of literature we see where credit is considered as a major limiting factor for adoption of agricultural technologies, including irrigation. But a lot of this research are focusing on supply side constraints, for example, high interest rate or absence of accessible credit to farmers and so on. So that supply side focused argument dominates the whole literature in credit. And because of that argument, there are a lot of policy focusing in many developing countries to remove those supply side constraints to farmers to make sure that farmers access credit. But the main motivation of this paper is how about the demand side factors also? For example, the risk behavior of farmers, the transaction costs, and the literacy of farmers, and so on. So in those three papers, the key aspect of looking at the credit access constraint to farmers are looking at also those demand side factors. So in terms of the data, very often, next slide. In terms of the data, usually in a lot of these published works, we just look at credit access at the dichotomous variable where people have access or not. And then we put that in econometrics or statistical models and look at whether that access or not, that two just dichotomous dummy variable can have impact on adoption technologies or productivity or so on. But in the paper I reported earlier, we go beyond that and we have a series of follow-up questions. If somebody says, for example, not accessing credit, then we ask them why, and then we can see a bunch of reasons why people are not accessing credit. Is it because of they have enough money, or is it because of lack of collateral, or is it because of the fear of risk and so on? Even if people say yes, that they access credit, then we can again ask whether they actually receive the total amount they applied for, or they obtain only partially because part of the loan may be rejected during the application process. So we did that quite a series of follow-up questions, and then based on that, instead of looking at the traditional two way of classifying credit constraints to smallholder farmers, we follow a different approach in the next slide, where we have farmers that are actually unconstrained, who maybe got the full amount of the loan they requested, or even who may not need the loan in the first place because they may have their own source of financing. And then on the other hand, we have people having constrained farmers, one side on the supply side, for example, borrowers whose application was completely rejected by lenders and others. And then also on the demand side, as I said earlier, because of the risk perception or, because of the illiteracy or because of high transaction costs and so on, people may not access or may not, apply for credit in the first place. So we have that classification. I think in the credit research, the making sure that the classification right, who are actually those people constrained by the credit and where that constraint comes from, demand and supply side, and then how we generate the data and how we identify, I think is a very critical issue in research. So using this data, we analyzed using, of course, several methodologies, econometrics and others, and then based on that, we have a couple of key messages in the next slide, where we find that, yes, credit could be a constraint, but it is not only from the supply side, there is also huge demand side issues. Actually, it's almost 50-50 in one of the papers we got. And then we look at also, okay, what are the supply side major issues? And one of the key issues on supply side is lack of collateral for the farmers. In countries like Ethiopia, for example, where farmers cannot use land to use as the collateral and also may not have other assets to access credit. So that's actually the main challenge in the supply side. But in the demand side, we can look at a whole series of issues from risk perception to information gap to even the nature of the farming. Subsistence farmers are, just do what they do, and maybe they are not motivated to go any credits, which is whether credits are available or not. Farmers may not be motivated to go because of the nature of the farming itself and the literacy and so on. So the last bullet point here is very relevant to the irrigation part, where when you look at irrigation, I think we need to look at from 3 points. One is the irrigation infrastructure and equipment. For example, the water infrastructure, the irrigation tools, for example, you can list down so many irrigation equipment, which require large investment, relatively large money. For example, if you want to buy water pumping machines, you may invest quite a lot of money. On the other hand, once you have those machines, then there is a running cost. Irrigation, for example, fuel, you need fuel. A lot of machines are powered by fuel, and then there are labor costs, there is maintenance cost. And of course, credit is not just an isolated technology. There is also some complementary technologies like seeds and fertilizers and agrochemical. Even if you have access to credit infrastructure, if you don't have access to those other complementary inputs, again, farmers may not adopt properly the irrigation. So we need to look at the irrigation technology and credit, I think, from these three angles. So the last bullet point is on policy issues. So I have 4 bullet points. First is obviously, I think we need to address both supply and demand factors just to remove the bias on supply side bias. And as I said earlier, supply side mainly, we have to focus on capacity of farmers or to hold on bankable collateral like land titles and other bankable assets. On the demand side, I think the human capital aspect, for example, literacy, infrastructure, and a very important thing. Then the risk mitigation aspect, for example, to remove the behavior, if we probably bundling credit with insurance may be a solution. And lastly, the last bullet point is again coming back to the irrigation and the credit, which we need to differentiate the credit constraint from the investment aspect, from the operational cost aspect, and from the complementary inputs aspect. So I think the more of the details are on those papers, and I think this is what I would like to share with you, and I'm happy to have questions later. And thank you very much. And over to you, Nicole.
Thank you, Bedru. That was right on time as well, so I appreciate that. Great. And so the next presentation will be from Svetlana Valieva. She'll be presenting on innovative and affordable financing for farmer-led irrigation development and bring in case studies from Nigeria and Uganda. So we'll be able to actually start to look at the specific cases. Svetlana is currently the coordinator for the Water and Agricultural Global Solutions Group of the Water Global Practice at the World Bank. She holds a master's degree in international economics and law from Johns Hopkins School of International Studies and a bachelor's in business administration and political economy from the University of Washington. And prior to working with the World Bank, Svetlana worked in the private sector. Abby, can you bring up the slides, and I will hand over to Svetlana.
Thank you, Nicole and Abby. I'm happy to be presenting on behalf of our wider team at the World Bank as part of the session. I also have to mention that the work I will be presenting is conducted by our farmer-led irrigation team and colleagues who lead investment projects in Nigeria and Uganda. So I'm simply the messenger. Next slide, please. So I would like to begin with a quick overview of the common modalities that are related to financing, which we can commonly find in farmer-led irrigation development interventions. And as a side note, just wanted to further highlight that typically the reason that FLID targets smallholders and in delivering irrigation access through small-scale equipment is because they typically have very little access to formal credit, which limits their ability to invest in relevant irrigation technologies and agricultural inputs that can increase their yields and incomes. So as we know, some of the common challenges that create hesitancy on the part of the formal banking system include perceived risks that are commonly stemming from lack of collateral, high transaction costs, irregular cash flows, to name a few. And then there are also natural resource risks such as floods, droughts, plant diseases, what have you. So while these challenges typically apply to the agricultural lending as a whole, they tend to affect lending to smallholders in particular because of the relatively higher transaction costs by serving a more dispersed population of smallholders and their limited ability to mitigate risks. And we also know that lack of access to affordable and appropriately designed credit presents a major impediment to smallholder farmers, and women even more than men. So with that, I just wanted to quickly provide this overview. So initially, sorry, with these four financing models, let's start with the one on integrated irrigation financing. So this approach, or I guess we could call it a business modality, facilitates linkages among existing actors. These, in addition to farmers, these actors can include financing institutions, aggregators, suppliers, government entities. And this is done in order to bridge service gaps and reduce transaction costs that stem from the remoteness of farmers and the dispersed demand for financial services. And this modality is particularly applicable in instances with clear failure to coordinate among these multiple willing and interested actors. And it is there to mitigate this lack of linkages that create poor information flows, reduce trust, and discourage innovation. So the next one that I would like to cover is the subscription service models that are commonly used. These include pay-as-you-go, as well as rent-own. So pay-as-you-go service is typically provided by equipment suppliers or owners of irrigation assets on a pay-per-use basis. So for example, as part of a rental arrangement, a sprinkler system can be rented for a specific period and returned thereafter. And then we also have the rent to own or hire purchase agreements where the buyer makes an initial down payment and then finances the rest in installments. And then the final two on this slide represent more of a blending of public and private financing. The first one is credit guarantees. These allow for risk sharing, by which financing risk is transferred from the private to public sector in order to enable affordable access to financing. And in this case, they address the perception of high risks of default, and they target the higher level financial institutions. And credit guarantees can also be helpful in addressing the issue of lack of collateral or poor credit history faced by many farmers, and thereby improving loan terms. And lastly, we have smart or partial subsidies. And these are commonly used to reduce the upfront costs of equipment purchases, particularly when markets alone cannot deliver the best outcome for farmers. In the case of irrigation, subsidies are often blended into equipment purchase financing arrangements, such as those for matching grants. In this way, ownership by farmers is strengthened since they're providing some of their financing as well, while the private sector investment is leveraged. And as we all know, subsidies, when used inappropriately, can have negative impacts with distortions. But in case of FLID, they actually serve to increase affordability and encourage uptake by farmers. So we can say that they have been used to some success. And next, we will go into a couple of case studies based on the World Bank experiences. Next slide, please. And in this one, the first one, we will cover Nigeria. That shows the application of some of the financing approaches that I just covered. In Nigeria, the FLID component was included as part of a project called the Agro-Climatic Resilience and Semi-Arid Landscapes Project, which is a mouthful, so we're going to call it ACRISOL from now on. And this component was included in order to increase irrigation uptake by smallholder farmers and to strengthen private sector service provision. There were multiple favorable factors and conditions actually in Nigeria for this. The government, firstly, was very keen to reduce the fiscal burden from the operation and maintenance of large public irrigation schemes. So they're very much in favor of supporting small-scale farmers. There was also a high potential for solar energy use because there were very many well-established home solar technology companies, and where they were already using innovative financing services such as pay-as-you-go, for example. And from the resource perspective, the country is well endowed with groundwater, and so the access to water was definitely not an impediment. Now, on the other hand, finance and technology remained as constraints to farmers that were limiting them from taking initiative in irrigation. And related to that, the high cost of purchase of irrigation equipment was also driven by lack of available and suitable irrigation equipment of adequate quality. So
2 minutes.
Oh, sorry, I'll be quick. So if we go to the next slide, so to address these issues, the FLIT component tackled these constraints using the 3 elements that are shown on the schematic. So they primarily consisted of awareness raising to generate demand, both on this for farmers and private sector companies. They created a digital platform and used results-based financing to enable affordable access to technology and services. And they also made use of the Challenge Fund, which provided grants to support private sector innovation. I'm not going to go into details in order to save time, but through these interventions, the farmers were enabled to drive irrigation expansion, invest in technology and services, as well as other agricultural inputs, and utilize asset-based financing or pay-as-you-go. And they also received training. Just as another side note, results-based financing is commonly used to stimulate provision of services to in markets that are hard to access, particularly when you provide smaller scale irrigation equipment. And then lastly, on the next slide, on the Challenge Fund, this schematic kind of also explains, and apologies for it being a little convoluted, but the Challenge Fund basically stimulated innovation by addressing some of the key challenges faced in developing irrigation. So it was addressing market, knowledge, technology, and finance constraints. And on the next slide, I wanted to quickly contrast the case of Nigeria with Uganda, which kind of represented a more nascent context for FLIT. So it wasn't as, the conditions weren't as favorable. So even if it is a water abundant country, there was limited knowledge of farmers about irrigation. Some of them have never seen or never used irrigation. They have limited access to credit and were purchasing expensive equipment. And then the equipment was also more or less centralized, so in major cities, so they didn't really have access to it. So in Uganda,
I think we'll need to wrap up, Svetlana, if you could.
Sorry. Okay.
Provide
I think with that, I would be able to close. So in terms of the modality that was used in Uganda, really quickly, the financing was a demand side partial subsidy where the government was financing 25 to 75% of the cost of irrigation. And the amount of the financing portion depended on the type of energy source that their farmers were using. So for diesel pumps, it was smaller, whereas for solar pumps, the portion was higher. So I think that is it. So we can go to the final slide. And here I just wanted to highlight that I provided the contact information for people who work on both projects as well as the FLIT team. So please feel free to reach out. There's lots of good information on the experiences in Nigeria and Uganda. While they're both still ongoing activities, there's some lessons learned that could be shared. So thank you very much. And I'm very open to questions as well. Thanks.
Great, thanks. And again, just to remind people, you can put questions in the chat function, and we'll also share website links at the end of the program so people can follow up on both the presentations and any other types of publications. And the next presentation will be from Natasha Akaliza. She's a program consultant at the Water for Food Global Institute at the University of Nebraska. Her efforts center on developing and implementing research and capacity building programs to help advance smallholder irrigation in sub-Saharan Africa. And she works with a team who has been working actually in Uganda and in that region. And her presentation will be on the role of public agencies and subsidy programs. Oh, sorry, that's not Uganda, sorry, it's Rwanda. And so she'll provide a close-up picture of how some of these programs and this blended finance has played out from an entrepreneurial and farmer level in Rwanda. Natasha, over to you.
Thank you, Nicole, for that introduction. Maybe if you can, okay, thank you. So Rwanda is a small country. It doesn't have a lot of irrigation, but national planning goal aims to more than double the irrigated area in Rwanda from approximately 48,000 hectares in 2017 to a little over 102,000 hectares in 2024. Access to irrigation for smallholder farmers is critical to increase food security, income, and climate resilience in rural communities. As shown on the Rwanda smallholder irrigation ecosystem map, smallholder farmers in Rwanda access irrigation through one of the three primary pathways, one being government and donor-funded irrigation, which are mainly large schemes. The second being through the government small-scale irrigation technology subsidy program. And the third, which is the last, is through unsubsidized purchases and informal pump rental markets. There are a lot of different actors that are involved in the smallholder irrigation ecosystem in Rwanda, which are classified here on the map according to their primary function. Some are public sector and some are private sector and range from for-profit to non-profit. Next slide, please. Next, yes. Next slide, yes. So one of the three primary pathways to irrigation, one I mentioned above is the small-scale irrigation technology or SSIT program. This is where a farmer or a small group of farmers purchase and own individual irrigation equipment in a transaction that is managed and subsidized by the government. So the program is intended to increase access to irrigation and equipment, ownership by lowering capital costs and providing government outreach through agronomists and SSIT engineers. To qualify for this program, farmers must be in lower economic class and must own no more than 10 hectares. Through SSIT, farmers can purchase equipment from approved retailers. The government pays the retailer 50 to 75% of the purchase cost, while the farmer pays only 25 up to 50% of the total cost of the kit. So SSIT is an active program where the government learns what is working and they make periodic changes accordingly. Next slide. So as with any policy, there are things about the SSIT subsidy program that works well and things that could be improved. We spoke here in Rwanda, we spoke with many smallholder farmers who say the subsidy is what made it possible for them to buy their own irrigation equipment. Also, the government agronomists are active in rural irrigation through SSIT, and they are providing training to these farmers. This creates conversion where farmers who did not irrigate before start to irrigate for the first time. It also improves irrigation management. From when this program was established in 2014 to 2021, SSIT increased irrigated area by nearly 21,000 hectares at a cost of approximately 1.5 to 2.8 million Rwandan francs, which is equivalent to 1,500 to 2,800 US dollars per equipped hectare. However, there is still room for improvement in the program. We observe that some beneficiaries of SSIT are relatively large farmers owning up to 10 hectares that are buying quite expensive equipment like solar irrigation. Also, funding doesn't always equal demand regionally. There is fixed budget each year by district, and in some of the areas with the most demand for equipment, the budget is maxed out. So the people who bought pumps 2 or 3 years ago on SSIT now cannot replace them, and new customers cannot get pumps when they're needed. Additionally, SSIT does not allow farmers to rent out irrigation pumps purchased through the subsidy and does not support irrigation as a service entrepreneurs. Government funding for irrigation is funneled to relatively few approved retailers, while other business models are not supported. We have observed that there are active informal rental markets, and potentially there might be demand for formal markets that could be helped by a government subsidy. Next slide. So this was a very brief overview of the SSIT subsidy program and how smallholder farmers in Rwanda access irrigation equipment and financing here in Rwanda. To learn more, please read our reports, mapping and analysis of the business ecosystem for smallholder irrigation in Rwanda. It's available online at go.unl.edu/ecosystem, or simply scan the QR code on the screen with your phone camera to download the reports. If you have any additional question, please feel free to reach out to me. My phone and email are included here. Thank you.
Excellent. Thank you very much, Natasha. I think that really gave us some examples from the Rwanda case on where subsidies do come in, but also some of the limitations on how these programs are designed and how they may not always meet the market where the farmers are. So that's really helpful. And I've been looking forward to reading that report as well. One of the things that Natasha showed was also the ecosystem, and this is something Svetlana touched on as well, and that's a very complex finance ecosystem. So our next speaker and next presentation is Tai-Thi Min. She's a senior researcher for innovation scaling at the International Water Management Institute. She's based in Ghana, but works across several countries. And she leads the innovation scaling research, multi-stakeholder dialogues, and partnerships with private and public sector entities. And she does action research to develop adaptive and systemic approaches to scale water management solutions and farmer-led irrigation. And Min will talk a little bit more about that complexity of the ecosystem and the markets being developed in Ghana and Mali. So Min, I'm going to hand over to you.
Thank you very much, Nico, for the introductions. This brief sharing insights into different financial demand for from irrigation equipment suppliers as based on our research on scaling farm-led irrigation and also others innovation solution for water management and irrigation, such as solar-based irrigation in Mali and in Ghana. It is well known that access to affordable and sustainable finance is a key constraint to scale farm-led irrigation. And irrigation equipment suppliers in many countries in sub-Saharan Africa are stepping in to fill the gaps in credit markets and by providing pay-as-you-go and others associated innovative financing modalities. In Ghana and Mali, irrigation equipment suppliers are very diverse in terms of size, business models, bundles of different products and services that they provide to farmers. Large-scale multi-functional companies, for example, are ones having manufacturing, importing, and distributing business in one. The importation focus on equipment that is customized to country-based market demands. These include, for example, solar powers, pumps, panels, and other water conversions and application systems. The manufacturing is mainly at the level of assembling products such as solar panels using imported technologies and materials. And there are companies also produce equipment for water conversion and applications. Horonja Solar in Mali is one example for these multifunctional companies who produce solar panels, importing pumps and others irrigation equipment to Mali's market. Interplus is another example in companies in Ghana who somehow put focus on producing water conversion and application equipment. Another type of companies that we found in irrigation equipment supplies chains is large-scale importing and distributing companies. They focus mainly on high quality and expensive kind of pumps and equipment produced by large manufacturers such as Lawrence, Grundfos in case of solar pumps, or hybrid between solar and electricity pumps, or electricity pumps, and others manufacturers. Sonikara Solar in Mali is one example of such kind of companies. The companies have had annual sales revenues of 0.5 to 2 million US dollar in recent years, and mainly selling solar power pumps and accessories. Last but not the least, in terms of populations, the medium and small size companies is mainly import and distribute irrigation equipment. For many companies in these categories, market demands is there and only one general demands. Marketing is mainly targeting direct sales, focused on existing customers rather than the new ones. This is almost nowhere to go for the company having irrigation business, especially not in the first place. From this landscape of demand of the suppliers of irrigation equipment, financial demands from those type of companies are very diverse as well. The large-scale company that emphasize market development and expansion, demands for internal and research and development investment for developing new products and new markets. We found these kind of demands in several companies, including Interplus and Horonja. They also demand for financial products provided by farmers in financial institutions, such as the banking sectors, to provide loans for their clients. The business-to-business investment and partnerships makes the irrigation equipment available in the market while lowering financial barriers to their clients too. These include, for example, investment from collective or community-based clients as a guarantees mechanism for the business, and also client joint investment. The large scale and small and medium-sized companies that are emphasizing market developments and inclusion of the market looks for de-risking investments to stimulate service provision to smallholder farmers at the bottom of pyramid markets. These investments include, for example, impact investment, de-risking subsidies, and planned finance, combining knowledge brokering and technical support with the company's resources. For all types of companies that focus on market expansion, but doing business as usual, they look for conventional investments such as grants and contracts provided by donors or other public sector actors to unlock the new markets while gaining quick returns or profits from the investment. Often subsidies and grant type models don't necessarily lead to market development and inclusion, as mentioned in the presentation by Dr. Beirut. As this type of investment don't always address the need of different company segments, nor stimulate a wider investment partnerships. So sustainably financing the irrigation supply chains require catalytic capitals blended with development and technical assistance, so that company can tailor their business models to address the diverse market segments while de-risking their investments. It's over to you, Nico.
Great, thank you very much, Min. And I think it's important to point out here that in the first presentations we saw, we saw the examples of Uganda, the example of Nigeria that's kind of up and coming and growing, and Rwanda. These are all countries where there's subsidy programs and public sector relationships trying to intervene in the market. Whereas MIN is presenting on Ghana and Mali, where there are no formal government subsidy programs or donor supported subsidy programs. So there's a lot more emphasis coming in from the company side as companies try to carry the risk, as they also are trying to expand their market to find smallholder farmers as clients. And so that really highlights the different needs for credit. While Bedru is focused very much on demand and supply of credit at the farmer level, we're now with Min's presentation seeing how that is also reaching into the need for the companies to have different forms of credit and finance. And I think as Min also touched on, the companies, many of them are really grappling with the issue of equity in the market, and how do you meet bottom of the pyramid clients, so the real smallholder farmers. And whether or not without any form of public programming and without a lot of de-risking, how can they meet those equity goals? And that leads us nicely into the last presentation of today, which is on financing irrigation for women and smallholders, lessons from the Women's World Banking Financial Inclusion Research. So Megan Dwyer-Bauman, she has a PhD in Human Environment Geography with expertise in marginalized groups' access to and use of water and land resources for agricultural production in climate-stressed regions. Megan is currently at Women's World Banking, and she's the global lead for qualitative research and the regional research lead for Latin America. And so Megan will be presenting more on these issues of equity and how do we address equity as we're trying to also expand access through better finance and credit. Megan, over to you.
Thanks, Nicole, to you and your team and to our other convening hosts. So Women's World Banking is a global advocacy nonprofit. We're based out of New York, but have offices in Nigeria, Indonesia, and India. We work to make financial tools and services more fair, accessible, and also useful for low-income women. And we partner with 62 network members of ours in 32 different countries to improve women's experiences with financial services. Next slide, please. Women's World Banking's research and advocacy center around the belief that the design, marketing, delivery, and structure of financial services and tools matter for equity. The financial system and its services and tools are overall not built with the needs of historically marginalized groups in mind. So we're a gender equity organization, and we focus in particular with persons that identify as women. But what I share today has relevance for other marginalized social differences, including ability, race, ethnicity, class, and others. So I'll speak often of low-income women, but these learnings really translate to many smallholder farmers. In addition to an equity issue, we also know that it's good for business when tools are designed in response to customers' needs. So we work with financial service providers as well as governments to shift the financial products and regulations to more fairly include persons historically excluded from formal financial services. And my colleagues here have already set me up really well that often we speak about impact investing, as Min mentioned, but today I'll be talking about loans. Next slide, please. Great, so I'm going to briefly touch on 3 areas of loans that require intentional efforts to be fair and equitable: access, the assessment of creditworthiness, and interaction with the financial tool itself. Next slide. So first we think of access, and Dr. Valana set us up really perfectly for this. How do potential irrigation customers or farmers learn about the loan products that are available, and how do they apply? So we would also ask then, are the product designers of loans thinking specifically about what farmers might need? So for our work, when we're thinking about women, we ask financial service providers to use women-centered design, thinking specifically about how women will be using a loan and for what purposes. This extends to the marketing of a product. Are women on the advertisements? Are women's voices heard on radio marketing or on pamphlets handed out? Are banking agents women at the point of loan applications so that women feel comfortable and heard? And we're also aware of broader social norms, the cultural context of places, the potential legal barriers to financing. Are farmers already part of a formal financial system? Do they have a bank account? Are women farmers culturally or legally permitted to take a loan or payment structure without their husband's signature, for example? We work with financial service providers and government agencies to address these barriers. Thank you. And then once somebody's applied for a loan, they're assessed for creditworthiness. And here we're doing a lot of research on bias that enters the assessment of worthiness through two paths: the algorithm, if it's assessed automatically, and or the loan officer decision. So our team won a $1.6 million grant from data.org in collaboration with the University of Zurich to identify and analyze gender bias in algorithms. Algorithms make predictions for the future based on historic data. That data might be prejudiced. For example, it's not based on sex disaggregated data. So fitting old data with bias to an algorithm creates an unfair algorithm. A lot of our work then also with financial service providers is to encourage them to collect and monitor more fair data. And this for farmers could include what crops are being grown, what general incomes are, what people are earning, and also the size of the farm. If the assessment occurs through a loan officer, that person brings to the assessment their own biases and subjective views. We have projects with a bank in India, for example, to hire more women bank correspondents that know the lives and needs of local women. And with other financial service providers, we've done gender bias trainings with customer service and managerial staff. And then as others have brought up, there's the issue of collateral. So if risk is perceived, then the applicant needs to put forth collateral. And this may be difficult for farmers, especially I'm thinking tenant farmers without property, thinking always about women from our point of view. And then we're doing work on movable collateral registries as an alternative. And we have a forthcoming report to highlight some exemplar models in Colombia, Laos, and Ghana. Next slide, please. So finally, once a person has a loan, we look for a fair interaction of that loan, whether it actually works for the person. So it's not only about access, but it's also very much about use. So for farmers especially, the loan payment structure and tenure might be an issue. Are the repayments fixed on a monthly basis, or can they be seasonal repayments? Do rural farmers have to travel hours to pay in person, or is there an easily usable digital platform, and do they have the technology and infrastructure necessary to do that? What about farmers with limited literacy? How might they interact, and how might their different needs for transparency be taken into account? If a loan officer visits a farm, are some loan officers women so that women producers feel more comfortable, or that speaking with a loan officer can align with cultural norms? Next slide. So moving forward, providing accessible, fair, and innovative financing for irrigation is necessary, and very urgently so. However, financing in and of itself is rife with challenges and obstacles for smallholder farmers, and perhaps more so for women. So our research and advocacy efforts emphasize the need for care when linking financing solutions to farmer-led irrigation products, and detailed needs-based and empathy-first research in creating financial solutions for farmers. So last slide, thank you. So thanks for your attention, and for the other panelists for sharing their expertise. A quick thanks to Mehrdad Mirpurian, our team's data scientist, who worked on this presentation with me. And our organization and research team is always open to conversations and potential collaborations on how to best make finance work towards the prosperity, security, and dignity of women and small entrepreneurs. Thanks, Nicole.
Excellent. Thank you very much, Megan. And I think this highlights, so many, it's a nice way to conclude with the presentations, because it really highlights that when you really do start to drill down and people do start applying, then you still have issues of equity. So it's not just an issue of trying to address all of, supplies, opening up the supply of credit, but there's so many more things that come into it. So we now have time to put questions to our various speakers. I'd like to invite the audience and participants to please put questions into the chat box, and you can direct that to everyone in the meeting for the chat box. We'll get started with a question that's already come in. about subsidies. And are there any worries about the high subsidies, such as Rwanda and Uganda, in terms of the future purchase by other farmers at full cost? So in other words, how might the subsidy programs that we're seeing in places like Rwanda and Uganda, how might those affect the future markets and even present markets for farmers who don't necessarily qualify for that credit? I think we can maybe start with putting that question to Svetlana. You mentioned this in your presentation. Do you want to address that question a little bit more?
Sure. No, the problem of driving down the costs of equipment through subsidies is definitely a salient one. And in terms of how it's impacting the sector right now, I would have to check with the team to get the most up-to-date information. But from what I know, there's a maximum threshold applied per hectare, so on a pro rata basis, which comes into effect for all. I would like to check if that may serve as a way to mitigate some of the distortion impacts. Also, these partial subsidies are provided directly to suppliers as well, not just to farmers. So those are the two things that I would like to look into, and I will definitely get back to Claudia on this.
Okay, thank you, Svetlana. Natasha, also you talked about the Rwanda case where there are subsidies. Are there any lessons from Rwanda on maybe how these programs could be designed, or ways in which they could be, equitable, but also reduce distortions in the market?
Yes, I wouldn't say that these, like, the subsidies affect like future the future purchases by farmers who will be purchasing them at full cost, because even currently some smallholder farmers are able to purchase like equipment at a full cost. As I mentioned, one like challenge with the program is the fact that the budgets in districts get maxed out without necessarily serving all the customers. So some of these customers tend to purchase the equipment at a full cost. However, there are still like things that could be like with the program, there are still things that could be modified, I would say, like instead of allocating like the money to farmers, to smallholder farmers, it could go to like entrepreneurs, it could go to like support entrepreneurs, because we've seen that these informal rental markets that are out there like are more serving like farmers to the extent that is not currently recognized. So we've seen that farmers tend to like rent from each other, like they tend to rent farms from each other. So that is like a model that is currently working, and if encouraged in the future, it could serve like more smallholder farmers without necessarily them having a lot of money to purchase like irrigation. So encouraging irrigation as a service, I would say.
Great. And Natasha, while we have you talking, I was also interested in if you see how you see equity in the subsidy programs, in terms of access for both women and men being able to use the subsidy programs, particularly because there seems to be a kind of cap on the budget.
Yes, I would say it's more like a cultural thing. I believe the subsidy is out there, like it's available for everyone. So a woman can still apply for the subsidy and get it. But like currently it's mainly men who are applying for the subsidy. So it's not because they don't know it, but also even on the farm, you see like it's mainly men who are operating these machines that they buy through the subsidy. So I would say it's more like a cultural mindset than like what the program is designed for. Obviously, we've seen that in some districts where like there are women agronomists who are encouraging women farmers to apply for this SSIT, you see like you tend to see like more women farmers who are applying for the SSIT. However, if like there is no extra, I guess like extra enforcement that is done, encouragement that is done that women, you should be applying for this SSIT, then like they tend to just like sit out and they let their husbands or like other neighboring farmers who are men to like, they let them apply for these subsidies, but it's not like it's excluding them. It's more that like it's the cultural mindset that the men who are operating these machines, since it's tend to be an asset as well, like they should be applying for like this subsidy.
Great, thanks, Natasha. That's really helpful. Bedru, I'd like to come back to you, since Natasha and we've kind of discussed a little bit on the issue of demand, whether it's a cultural or other factors. Bedru, do you have any? Were you able to look at gender differentiation in the demand side for credit?
Yes, Nicole, surely I was actually typing when Natasha was speaking. So I think it's not only cultural issues. Yeah, there is cultural issues there partially explained, but there is also issues of access to the very resources that you can use for irrigation, land, for example. In many parts of sub-Saharan Africa, access to land by women is a very serious constraint, and this has been proved by research after research and observations, and so that's I think one of the factors. Do women have equal access to land? Because you need land to do irrigation. You can't irrigate just on air, on space, right? So I think that's one key issue. Of course, the cultural issues, for example. In male-dominated societies, where sometimes women are required to get signatures or approvals of her husband to go to get access to credit in the first place. So in the demand side, yes, we have, for example, the last paper just come out recently on the World Development Journal. We look at the gender aspect in Tanzania and in Ethiopia, and yes, gender is specifically like less access to credit, or they're like more constrained, let's say in this way. The women are more constrained to access to credit compared to men, and there are a whole range of issues, like I said, access to land and even access to assets. For example, in Ethiopia and in rural Ethiopia, mostly the cattle, if you use cattle, for example, as a collateral, men normally do have more cattle head than women. So many women don't have cattle even to consider, So there are a range of issues. And I think that gender equity issue should go beyond the cultural factors, but also the resource access itself, right?
Great, thanks, Bedru. And I want to do one last question around the equity and gender, and that's for Min. Min, you're working in countries where there are no subsidies and where it's very much a market-driven context. So I was wondering if you see anything from the company side in those countries in relation to reaching women farmers as a market segment, because we know that women are an important part of the producers in Africa and in other countries where we work. And not all of the countries have subsidies. So have you seen anything that we could learn from the Mali and Ghana context where there are no subsidies in terms of reaching women through the companies?
Yes, Nichols, there are several companies who are specifically target women as their one of the client segments. For example, Emicoms, Ecotech in Mali, Pomtech in Ghana, PEC Africa in Ghana, for example. The mechanism that they target women clients is through pay-as-you-go, and also through women farmers group investment. For pay-as-you-go, they somehow target the women from the credit ability and throughout the payments schedule so that women can access to the pumps, for example, solar pumps in these cases at a loan. Those companies partner with LC's project to develop these digital credit assessment tools for women clients, and focusing on assessing women's financial capacity and literacies to see whether they are eligible credit worthiness, and also whether they have potential to invest in coming years, 1 or 2 years. For some companies, they target farmer groups, women farmer groups. They mobilize a group saving using the existing informal and or formal credit. Susu saving schemes is one example in Ghana, and companies are facilitating and mobilizing women farmers group to save regularly in order to invest in the collective use of pumps. In Ethiopia, a company focused on beyond irrigation, because at the moment, those farmer group clients, they are not yet interested in irrigation, but in solar energy for others purpose, mainly for domestic use of waters and energy. Yeah. So there are a number of cases that they specifically target women and gender inclusion in their business models. Over to you, Nico.
Yeah, thank you, Min. I appreciate that. It's good to look at both of those types of examples of, where the market is being supported through subsidies and where it is not. We also have a couple of examples in the chat box from India and Nepal. And those are countries which have, not necessarily as a country, but certain projects have tried to address this issue of land and credit access. So it's worth having a look at the chat box and seeing those examples. I wanted to also, we've heard a lot today, and compared to 20 years ago where, the refrain was simply, we need more credit. We can see from these different projects that come in at different angles, whether it's from the finance side and programmatic side, whether it's companies, whether it's looking specifically at the banking sector and equity. We've learned a lot over the last few years about the demand and supply of credit and what's working where and what isn't. But I was wondering from our different presenters, where are the knowledge gaps going forward? What do we still need to know in order to ensure equitable access to finance, specifically for different types of irrigation investments? Any of our panelists want to mention that? Bedru, do you want to start?
Yeah, thank you, Nicole. I think if you look at the portfolio of what we call traditionally smallholder farmers, these are, in a true sense, smallholder farmers who are still subsistent. I don't have the exact percentage of farmers, but I think the majority of farmers, the overwhelming majority of farmers are still subsistence farmers with very small, less than a hectare of land, and with the growing populations and so on. So there is still quite a huge gap in knowledge, for example, information in terms of even where this finance. There is a lot of risk perception. People really, if you ask a lot of people, even if there is a financing gap, when you ask people in survey whether they actually willing to apply for a loan or even attempt to seek a loan, then people automatically, a lot of people say no, because they feel really the risk perception is very high, because there is no risk mitigation measures, accompanying with this credit. If the crop fails, then they have to pay either by selling their cattle or their other assets. So I think if we think of the scaling and the large access to credit, one thing that we should take into account is the risk, how we can mitigate the risk aspect when we, when you motivate farmers to go to the credit. So, I know there are some some interventions in terms of, like, for example, weather-based risk, insurances and so on and so forth. But I think that's for me. So the two key points for me is, one, the knowledge level of farmers are still very low in many cases. And secondly, the risk aspect is very, very high. The risk perception is very high. So from the demand side, I think that's the two major issues which should be, I think, somehow addressed either through information, either through awareness, or bundling credit with some insurance products, so people have some confidence, that even if they fails, they have still insurance to mitigate that risk.
Great, thank you very much, Badru. I appreciate that. Svetlana, coming in from your side, and maybe you can offer some insight from the World Bank as well, and from your group within the World Bank. Where do you see some of the knowledge gaps on finance for farmer-led irrigation?
Do you mean pertaining to the financial institutions, or also on the farmer side?
Well, I mean, it could be any of them, but
Okay.
but yeah, what kind of information, what is it that we still don't know that would be helpful in order to design programs better going forward?
Got it. I think that the main challenge of kind of tackling the dispersed nature of smallholders and the information asymmetries that creates, that seems to be kind of the main issue to tackle, because it sort of reduces trust. So as part of the integrated financing approach, one of the aspects that they focus on is providing financial institutions with a little bit more information and knowledge. And then use of ICT tools, for example, has served as another mechanism to try to reduce risks. But as far as areas where further information might be required, it is actually coming up with ways to create financial products that are suitable for farmers, because there's such a diversity of farmers that are present in the sector, that flexible and more tailored financial products is kind of where I think the focus needs to go next. So I hope that answers your question. But yeah, and I'm also happy to look more into this, and if anyone has more specific questions.
So in other words, it's really going down even further to try to look at all of these different categories of farmers, and maybe different categories of companies, like Min had raised as well. And it is a really complex ecosystem. So there isn't a one size fits all type of finance product, and we really need to understand which ones are appropriate where.
Yeah, but just to add, there's definitely potential to tap into it further and to create impact on a larger scale, because it is a pretty large segment that is untapped. So that's why I think FLID chose it as one of the main interventions, being finance.
Great, thank you, Svetlana. And I wanted to ask Natasha, you've worked with a lot of farmers. You've also mentioned the service provision, where farmers rent pumps or have access to service provision for irrigation. And I was interested in the case in Rwanda. How important do you see credit and finance, whether it is directly to farmers or whether it's to companies or potential service providers? How much do you see credit as a continuing constraint to scale irrigation?
Yeah, I think it's really, I would say it's really important. I feel like even these smallholder farmers here in Rwanda, I think earlier I mentioned that you have to qualify for the subsidy, you have to own less than 10 hectares, not more than 10 hectares of land. But still, even farmers who own like 10 hectares, they are considered like big farmers. So like for a smallholder farmer, mainly I consider those that have like less than a hectare. These are the like the many farmers that we encounter with who are having challenges accessing irrigation. And like even that remainder, like the 25 or the 50% that they have to purchase, like that they have to pay, is still like a lot for them. So like if there was, I think the credit and the financing like is really important to still like uplift these farmers who cannot even afford the 25% that is off of what the government has been able to pay for them. So I still think there is potential for like for irrigation as a service, because many of the smallholder farmers that we've talked to who are like who are using these services, what they tell us is that like the reason why they cannot buy like the reason why they're using these services is because they cannot afford the 25 or the 50% to purchase the equipment. Therefore, they result into renting like the irrigation service, which is cheaper for them, which is like relatively cheaper for them. So I think if like more focus was on the entrepreneurs or like the people that are providing the irrigation as a service, it would like largely or hugely benefit smallholder farmers to a large extent, those who cannot like afford to, because even the farmers, they fear like taking loans from the bank. Like it's a big risk. Like one farmer would tell you that I'd rather like not irrigate instead of getting a loan, because you have to put a collateral, which is your house or your land. And they might like, they're not understanding these risks, and they're not willing to take those risks in order to irrigate. So but there are other ways or solutions that don't necessarily involve like them getting loans from banks.
Great, thanks very much, Natasha. And I think, you know, this just points to the fact that the financing may need to go beyond current programs that look primarily at farmers directly, and consider how, whether it's through a subsidy program, whether it's through de-risking, whether it's through a special credit product directly from the company, such as asset-based finance, how we could reach more than individual farmers who want to directly purchase or invest in equipment, and look more at that service provision. So thank you very much for that. I also wanted to come back, and there's been a little bit of discussion around agricultural insurance and bundling. Are any of our panelists, I know Megan and Bedri have discussed this, do either of you want to just highlight what we don't know and what we should know maybe more about how insurance could become part of these financial products? Megan?
Yeah, I'd be curious to hear from Bedri, who brought this up. Really curious about this. We're working with a network member of ours currently in East Africa that's doing agricultural insurance and for smallholders, and it's, you know, it's just really challenging. And exactly to Svetlana's point, like we have to provide a business case and make this feasible for businesses to provide these services. And so thinking too about that, but also to Natasha's point, that the trust, even getting, you know, smallholders trusting to get agricultural insurance policies. So I was like, wow, this would be, you know, it could solve some of the risk issues, and it, you know, we face the same kind of barriers and feats in getting to that. But Bedri, I'd love to hear more what you were thinking.
Yeah, thank you, Megan. Thank you, Nicole. I think this idea of bundling innovations or bundling interventions are becoming quite important, at least, you know, from thinking point of view, because if you do a single interventions, it may not work, you know. So I think, you know, how we can design products, 3 more products, and make sure that we address, when we address one, it may not, you know, affect the other. So this bundling could be, I think, we have a 1CG initiative, Rethinking Markets initiative, which I am coordinating in Nigeria currently. And one of the areas we are exploring is now how we can develop the financial service bundle, for example, the credit, insurance, and even specific financial products that actually satisfy the needs of, for example, perishable vegetable producers in Nigeria, for example. By the right now, I'm in Kano State in northern Nigeria, working exactly on this type of issues and discussing with different financial providers, logistic providers, service providers, farmers, and so on the business of bundling. It's just a project that we are starting, but I think this bundling idea becoming very, a lot of farmers and people are really, very interested and interested to look at, okay, if some interventions, deal with problem 1, how about problem 2? How about problem 3? And how can bring this together so that we have a more effective way of interventions? So I don't have any answer at the moment, but I think this is something that we are working. Megan, I think we can have some sort of discussion as we develop this project, and also Nicole. Thank you. Any other people?
Yeah, and I think that just points to, once we begin to fill in information gaps on one topic, and we start to make progress in terms of providing credit and making finance products available, it opens other questions and other knowledge gaps. So I think that this is a good place for us to close out our question and answer discussion. I want to hand over now to Zach Stewart. And Zach is a production system specialist and a U.S. diplomat with USAID. He's in the Bureau for Resilience and Food Security. And he has over 15 years of experience in international ag research and development. And we've asked Zach to come in and provide some closing comments based on what's been discussed today and what's been presented. And Zach will close out our session. So Zach, over to you.
Well, thanks, Dr. LaFleur, and thank you all to the panelists. This was really an insightful session. I'm a soil scientist, so much of the financing mechanisms go beyond my technical area of expertise, but I have a few reflections, and especially critical and useful, how useful this session was as we're actively designing our future investments in small-scale irrigation. And so this session really guides that future design. Just a few comments and thoughts. We really know that farmer-led irrigation, small-scale irrigation, is a keystone and critical to agriculture-led growth, to boosting resilience, to climate adaptation, boosting nutrition. As a soil scientist, it connects well, especially now in the current context with the Ukraine crisis around fertilizer disruptions. If we want to improve that fertilizer use efficiency, irrigation, appropriate water holding capacity is critical, seed systems. And so we quickly identify how it's a systems approach, and irrigation is really key often in these smallholder systems to unleashing the full potential of that farming system. And that, I believe, is where our science should go, not just in the science of creating more pumps, showing the impact of irrigation, but rather what you all were talking about, these innovative approaches that enable the adoption and scaling of useful small-scale irrigation technologies. So a couple areas that popped out to me that were extremely exciting and of interest. One is especially around from the discussion around the targeting aspect. So you all, had presented a toolkit really of different financing approaches, many different approaches being offered, but what was evident was that it varied by when it worked for what class of farmers, for what gender of farmers, under what context, under what policies. And so we know, like with many things, biophysical, socioeconomic, that it's critical if we want smallholders to adopt it and be enabled, that we are very precise at that field level to the individual, making sure that those financial products or agronomic practices are very tailored and targeted to that farmer. Yet that's really challenging for last mile delivery, doing that at scale, because that's it's knowledge intensive. So how do we take a suite of good and proven financial approaches and practices and tailor it at scale, doing it at scale, but very precise across a broad heterogeneity and diversity of farmers in very different contexts. So that was one observation. The other is around, again, this systems research and suitability assessments. So oftentimes as a biophysical scientist, I will quickly check off the list of, well, there's good groundwater resources, it's good quality, it's not very low depth for pumping, there's good soil water holding capacity. This would check the boxes of farmers should adopt small scale irrigation. However, we know that smallholder farming systems are much more complex across and beyond productivity, but the economics, the environment, the human and the social domains, and making sure that we are studying small scale irrigation with that systems lens to identify key synergies and trade-offs across that system to really prioritize our investments to overcome those barriers. Svetlana, your radar charts were really an excellent systems evaluation to help identify on that radar chart where is that key barrier to drive a system. We know all those indicators are important, but they're going to vary by system to system what to prioritize. With that, I'll wrap up. Really appreciate this. Like I said before, this is extremely useful for guiding USAID's investments, how we're designing our programming and prioritizing our investments. The Feed the Future Innovation Lab for small scale irrigation has really been our flagship in this space. So thank you for guiding both developing technologies and approaches, but also guiding our future investments in this space. So I really encourage you all to track this innovation lab, follow them with their website, and we can drop that into the chat as well. And I know they also have a series of webinars coming up, Dougherty Water for Food, and many others that they'll be sharing. So please continue to track this group. But thank you, Dr. LaFour and panelists, and thanks everyone for attending this very insightful session.
Thank you.
Thanks, everyone.
Thank you, Zach. Thanks, everyone.
Thanks,
Thank you.